What's going on, traders? Hope everybody's having a good weekend. Wanted to do a quick analysis for the upcoming week on the E-mini S&P futures as well as the NASDAQ 100 NQ. We'll go over some larger time frame charts as well as some day trading levels for the week. And we'll take a look at the economic calendar to see if there's anything important on that front that we should be aware of as well. If this is your first time joining the channel, thank you so much for joining us for our weekly prep video. Go ahead, you know you want to do it. Subscribe to the channel, turn on the notification bell so that way you are alerted every time we post a new video about the market and trading. Really appreciate the support. It means a lot to me. And of course, as always, the video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, so with that out of the way, before we get into the weekly charts, let's just take a quick look at the economic calendar and we'll go over any data points that we want to be aware of. Of course, last week we had a big week with the elections, Trump winning the election and bringing the markets now to all-time highs. And we had the Fed rate decision on Thursday, and they went ahead and dropped interest rates by 25 basis points once again. So they are continuing with their less restrictive policy now, and we will see how that interacts with the job market, which has remained relatively strong. Started to look a little bit weaker, but overall has held up. And we'll have to see again with if the numbers change or influenced at all by, again, the strikes, and we have some seasonal hiring here coming up in the last quarter as well. So that will be interesting to see. With all that being said, I don't think we have that much on the calendar, but let's take a look. Either way, the Monday is Veterans Day, bond market's closed, stock market's open. We have no economic events there on Monday. So what do we have for Tuesday? All right, well, we've got Waller speaking at 10 o'clock, Barkin speaking at 10:15, double whammy right there, and then Harker speaking after the market's closed right around 5 p.m. So I think there we'll just watch to see any Fed speak there that might influence the market, but I don't really have too much concerns about that. Wednesday, big day. We'll take a look at CPI, take a look at inflation numbers and how they are coming in year over year, month over month. So that will be interesting to see right there. All eyes on that being a big market mover in the morning. Then right at 9:30, John Williams, New York Fed president, starts a speech. Looks like they have some type of a summit or something going on this week because they are continuing to speak. 9:45, Lori Logan. Then we have the St. Louis Fed president at 1 o'clock. Kansas City president speaking at 1:30. Thursday, the 14th, initial jobless claims at 8:30. Pay attention to that. And then we have core PPI coming in at 8:30 as well. Definitely be paying attention to that. And 3 p.m., Federal Reserve, the big man, Powell, speaking once again at this event, which I don't know what the name of it is, but we can Google it and figure it out. Obviously, there's something going on with all the Fed speakers and presidents this week. Friday, pretty quiet. Retail sales and import price index, 8:30. Not really concerned about that. I think for me, we'll just be really paying attention to when those Fed speakers are on deck. Initial jobless claims, PPI and CPI is really what I'll be paying attention to. Everybody really is going to be having their eyes on CPI with that inflation data. So that's what we've got in store. Okay, let's keep it moving along here. We're going to get into the weekly chart, just a blank chart like we always do, just trying to get a clean view of where we are as far as the trend and the candle strength, well, as I mentioned, of course, Trump did win the election, and now we have a huge weekly candle to the upside. ES has now hit, we've been talking about this 6,000 for a while, finally there now. Here we are, the high of last week, 640 half, 60-40 half. So there you go, bulls. It seems, and I think we did talk about 650 as well. I don't remember. I have to go back, but I know 6,000 we've been talking about for at least 3 or 4 weeks. And here we are. Okay, so what's next? Well, we've clearly broken out of this sloppy balance range that we were in right here and taken that out. So from just that structural standpoint, right, what are we going to be looking at from that weekly perspective? Well, we're definitely going to need to hold over those balance highs, right? That just makes sense, because if obviously that breaks underneath, then we could look at this, A, maybe as a failed breakout, and B, that's really just going to start to change the structure, right? At that point, we would no longer be making a new higher high. We'd be back in the balance zone and still kind of in a bullish neutral stance overall. And really, if that happened, you would have to really kind of think that anyone that was trapped on a late long later in the week would be then overhead excess inventory and be looking to sell out of their positions, right? So I'm marking off that this weekly balance range that we've been watching, and so we can just have an idea here. So really, and it's got plenty of room. I mean, it's over probably 75 points, if not a little bit more, whatever. 59, we'll say 59 is 59.15. What was the high here? Let me just see. 59.30. Okay. So if you want to go from the high of the wick from the week of October 14th, you can do that. I'm kind of going more by the body of that. Let me zoom in here. Whoops. A little too far. You have to forgive me, a little under the weather. I'll really be going by the body here of the week of the 21st. And we'll see this a little bit more on the daily chart here. But you could also definitely make the argument for something like that coming in the wick. And really what you could do, and this is probably what I would say is the best way, is to really make a little demand zone in there. So for me, as long as price now continues to hold over anywhere from 59.30 to 59.15 thereabouts, right? Got really no reason to be bearish at all, or really to kind of, I mean, certainly there might be some intraday short trades, but from the weekly perspective, excuse me, nothing really to overall bearish. Let me get my water. Okay, sorry. Nothing really to be bearish about overall. And any pullbacks, and we've talked about this, the 50% retracement, 25% retracements, usually on down days. But of course, the same thing can be utilized for the up days too. So, I mean, even 50% retrace, giving us a potential mid-candle breakout, could even potentially take us down really to the weekly highs of the 28th. Now, my issue with that would be the fact that we would potentially then have that excess inventory overhead, giving us some issues. But if you were so inclined, you could do something like that and mark off. And right underneath that 59.15 anyway, we do have that whole number psychological at the 5,900. So there I can certainly see a case to say, well, really, unless we break under 5,900, then, there's not much there for the bears on the bigger picture time frame. I think that's all well and good and fine. So it just depends on how you want to look at the market, how you want to do it. But I think that these three levels here overall are important. That 5,900, basically 5880s, 90s is basically that 50%. So you've got either 25% or 50%, anywhere just above any of these areas, right? Could just set us up like this, and that would be fine. And the other thing is why also I do think that potentially we're in store for something like that, right? We just had a breakout of the balance zone. So what would actually be the most healthy thing now overall? It would be to come back and retest that prior breakout, and let's see what the bulls are really made of. Come back, retest the prior breakout, setting us up for a nice another swing long if you are interested and bullish. And I mean, why wouldn't you be? You'd have to, you know, that's a pretty standard trade right there with a nice risk to reward, as well as a solid, you know, downside risk, you know, just like, you know, like so for your risk. You know exactly where you're wrong. It's very small. And if you're right, boom, from here, first target always is going to be pretty much those matching highs. You can even go from that body right there. So that's, and those lines are not straight. That's going to annoy me. But you get the idea. All right, that's a little better. That's always going to be the first target because we don't know if it's going to be able to get there. But if in fact it breaks through it, then, you know, here you take off the majority of your position and then you just let the rest ride. Would have to say from the weekly perspective, we start closing over that 40. There's no reason why we shouldn't see 100, 60, 100, right? And from there, we might push up, probably then pull back and retest that prior breakout, same thing. And then we would just go ahead and continue. Okay, so I mean, do I want to run in short because we're up here? No, not really. I don't want to get in my head that automatically, you know, we're going to have to go ahead and retest this. I think that would be natural and it would be a nice healthy little reset. But I'm not going to have that bias. I'll let, of course, that intraday chart let me know what I'm going to be doing, you know, day to day. But this is certainly a setup and a scenario that we could see. And if you're not interested in buying here, you just wait for the breakout, wait for the retest, and you just do the same thing but higher. So you got a couple of choices there if you're on the bull side. Right? And what would you want to see if you're bearish? Well, certainly breaking underneath. Like I said, we start to see some candles come back down here, start to see some candles here. Well, then I am going to personally consider all this up here excess inventory, late trapped buyers, and they're going to sell anytime price starts to drift up. They're going to be like, I'm underwater, I'm dumping it, which would only bring us down lower. Right, so it's going to be real hard, and like I said, we still have that weekly high, or that 5,900, 58.95 there. You can get the exact number. 58.93. I hate 93. We'll just say 95. But there you go. I think we probably would trade back down. If we did start to break under, I mean, I don't see why we wouldn't come back down to, say, 58.30. Right there. Right. And then underneath that, we would go ahead and attack the balance lows. Right down all the way back where we came from. It probably would be more likely, you know, the market's so strong right now. Even if we did break under, you know, I don't mind a long potentiality in the 58.30s. You know, if we break, obviously we'll trade, but I think that's also another idea. If we do break under, okay, we broke under, let's sell. Another arrow, and here, same type of situation. Got a pretty nice defined risk. Got a pretty nice defined risk. Just a couple of, 10 or 15 points, whatever it is. 8 points, whatever. Right there, boom. Try to take it back up to the balance highs. Could reject there. We don't know. but maybe it rejects a little bit, just puts in a lower high. Then we break up, come back, retest it again, and then it's basically the same trade coming up, trying to come and match these weekly highs here, like we were just talking about before. And then just try to milk it as long as you can. I don't know, again, will we break there, stop there? It's possible, right? That might be the actual spot that shows the rejection in that case. Maybe we just come all the way back down to here, and then maybe we break. Of course, this is all just conjecture here, so I don't know. But a couple of different paths. Now, the other thing to consider, we have a let's see. I'm not going to be able to get it. Why isn't this doing this? We have 320 points about range. Is that even right? Oh my God, yeah. Holy moly. Just want to double. Yeah. 5%. So about 320 points on ES. Holy moly, that's crazy. So with that said, what would also be a very likely scenario? Well, we always talk about this. Markets have a few modes of price delivery: running, resting, running, resting. Would totally make sense that we trade within this weekly range. The most bullish thing, obviously, the 50 to 25%. But why wouldn't we just see price kind of hang out? See price kind of hang out here. Maybe we start to build a flag. So I wouldn't be shocked to see, maybe we get something like this. We just trade within the upper bounds of this, right? And potentially rest, and then maybe make a rocket up. I mean, by the end of the year, it really doesn't seem like 6,200 is that crazy even to think of, especially if we do this on a weekly and we form out a weekly flag. Well, forget about it. Easily. Another 200 points, I think. Wouldn't surprise me. Okay. But we'll start singing a different song, if it breaks under. Now, we're still a little red here on the weekly Momo. Still overbought. Hasn't flipped back green, so that's interesting. So let's now go just from this view into our daily chart. Okay. And then just so you can see a little bit easier on a nice clean chart what everything looks like. Balance, 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 balance. Now, if you were a swing trader and you watched last week's video, you could have obviously done this on futures. You could have done it on SPY too once you saw these levels. Let's just go back. Now, let's go to the video. Let's go to the chart that we have been working with over the last couple of sessions. And we talked at length again about down here in this area, high traffic. And let me tell you, if you paid attention, you were willing to take the risk, you got paid so nicely right here. I mean, we hit the lows once again. We talked about the 5720s. We said if we got underneath that 5720, 5700, that's what would really be taking out the bulls. It would be bad news. We had a set defined risk here. Boom. And you just, if you had that trade, God bless you. Great work. And I hope that this video helped you. Okay, so yeah. So that's a big move. Now, what am I going to be looking at now? You know, we're up at all-time highs. It's going to be a little bit tough here. I threw out a couple other levels that I'm just watching on the daily chart to see what we can hold, maybe also to see if if we break a certain level, that would really kind of give us maybe more of an intraday sign or a daily sign potentially that we're actually going to come back and retest this prior balance high. Let's watch the highs of the 6th. Okay, so that's going to be, and you know, if you want to get super specific, 59.67. I'm going to say 59.65. You start to trade underneath that, really, and close under it on a daily. Now, we do have the lows of the 7th here coming down to around 59.50. So I think under 59.65 is a warning. Under 59.50, I think then it would be very likely that we would come back. Maybe we just come up to that high of the 17th. We've talked about that little wick there up in the 30s. That's potentiality right there. Or even what you could do if you're bullish is take a starter position at the 59.30, add into it there at that 59.15. Obviously, if you breaks underneath, you got to get out. But you do have that daily 9 sitting right at 5,900, 5,903 basically, and I bet over Monday, as this probably gives us a chop day on Monday, range consolidation. We already talked about that. This 9-period moving average will probably give us some nice confluence and start to drift right up around into that 59.15 area. So I'll be watching out for that because you've got even more confluence than if you've got the daily 9 coming into the prior breakout balance highs. Boom, boom, boom. I've got plenty of reasons to want to go long right there for a trade if you did not, in fact, miss this amazing opportunity that we had laid out for you last week. So with that being said, like I was mentioning, watch out for this potentiality. We can see obviously huge candle, huge candle, huge candle. Now what do we have here? You can see in the size of the candles, momentum is slowing down just a little bit. Friday session too, so wasn't quite expecting as much. Watch what happens on Monday. I personally think it's gonna be more of a chop day, but see what happens if we do a little look above these highs and if we fail back below. I think that might be an interesting opportunity for us intraday, which let's get into that chart here right now for a short trade. But, you know, I do think, you know, I guess one thing I should say right now, though, really quickly, before I get into what, you know, that I think it's important that we do have a retracement and retest this area just as it's healthy. I mean, look at this. It's 1, 2, 3, 4, 4 or 5 green candles in a row. I mean, you know, we need to have a little breather here. Again, I'm not gonna let that influence me on trades. If it doesn't happen, it doesn't happen. You know, market just can keep going up. It doesn't make a difference. I will say positive, although on the weekly, it was still in that spicy zone on our overbought, oversold indicator. Daily has got a pretty nice reset now. Plenty of room before we're getting spicy. So market definitely has the room to go higher as well. But let's love a little reset. Start to get into some day trading levels now. Oh man, look at this, how beautiful that is. I know, sorry about the coughing. Okay. Oh, sorry, I rolled that one back. My sincerest apologies. Okay. All right. You know, and I think actually it'd be interesting to look at this from a 4-hour perspective on a VPA. Let's do that in a second. But actually, let's do it now. We can still go over this chart. This is not it. What? Here we are. Okay. And this is exactly what I was wondering about. 4-hour chart now. And I wanted to kind of look at this structure overall. This low volume node, LVN here, low volume node. This is definitely thin. So if we do start to see a sell, it will not be very hard. This area definitely is a little bit healthier. You can see the profile built out. Oh, wrong button. Which one did I want? Okay, you can see the profile here built out a lot better with more volume. Here's our point of control right here for the 4-hour, sitting right around that 6,000 even mark. So watch that as well. But that's our 4-hour VPOC as it stands. That being said, if we do really start to see that sell, look at all this thin structure here. It would just be very easy to tear through this. I don't know if they'll actually be able to do it because it's built up here, but just want to note that thin structure for sure. And I had a feeling, that had been created with that move, that we have seen. Let's maybe give us. Okay. Okay, so what's going to happen here for the bulls, right? Well, we're going to have to certainly clear over the swing highs, right? Anything, though, above, you can see here, it's a little balance area. We kept banging up against 60, 610. Bang, 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 right? So even a pullback right here into this little balance zone, right? Even a little baby one, we could say, something like that. Pull back 59.10, then look for a long. Back up to the swing high to 35. See if we can get that 40, right? That's certainly an idea. But that would give us a nice hourly higher low. Then we come up to the matching highs, and then maybe we break over, I don't know, and continue. But if we do break underneath that 60.10, well, then I'll be looking a little bit more toward that short side. See about selling down. Look to these lows. Of course, we've got whole number right there. Gotta, and the bulls are probably gonna fight for that 6,000 like a dog, holding on to his last steak. But if we do break underneath, watch these matching lows, maybe 59.90, and then ultimately seeing if we can kind of come into this area here in the 59.80s. Underneath that, 59.80. Got a little bit of these highs here. Watch around that 59.70 area. Don't have it marked off, but I don't think that is wrong to, wrong to look at, right? So underneath 59.80, 70, 73 area, watch, could find some support up there. But if they do not hold 59.75, 73, I would say we'd probably sell back down to 59.50. And you know what? I am going to mark this off because we did hit here quite a few times. Not normally how I have the charts. I don't like it. But I think it's worth paying attention to right there. Okay? Underneath that 59.50, well, then we've got another issue. And we'll probably sell back down to 59.20, 530 area, and another potential buying opportunity. I mean, even the 59.50 is another buying opportunity as well. So, you have to consider that too. And of course, if we broke under, sold down, right? You look for the long, comes back over, could reject. We don't know. Maybe it breaks over, comes back. Then you're just looking back at that 6,610. Right? So there's the path. If it rejects, back down. Maybe, if it rejects, maybe it hits here, double bottoms. And then that's the time that it actually makes the move all the way under. That wouldn't surprise me either, to retest that and really affirm that 59.50 as an important key area there. And it makes sense, right? We consolidated here for that little flag. Right, balanced, and then we went on the rocket. All right, so I think that's everything I wanted to go over for ES. Let's do some NQ here. Let's go back to our other chart. Let's do... Oh, you know what? And why don't we, while it's at least here, we'll call out, of course, this is dynamic. We're sitting right on the hourly 9 for what it's worth. Hourly 20 is at 13. We'll call it 15. And the 50 is at, hourly 50 is at 59.81. So it's actually right there in this area, the hourly 50. So it'll probably move up a little bit, but worth noting either way. And it looks like we are, no, it looks like the hourly 9 and the 30-minute 9 are just right there, pretty damn close. And we've got the 50 now on the 30-minute, just 8 points above the figure. So, all right, let's get into the NASDAQ 100. And see what we can take away from that chart. SHMENQ. Okay, what do we got? Start off with our blank chart on weekly. Well, we've been talking about this divergence forever, and finally, NQ, the tech sector, has made a new all-time high. So, what do we have here? Unless noted otherwise, everything that I say is going to be based around the prefix of 21,000. Okay? So, finally now we are above. And now what are we going to be looking at, right? Huge candle here with the rest of the market. And we ran, let's just take a look. This week's range, give or take, is going to be about 1,200 points, 1,300 points thereabout. About 1,300 points, pretty much, we did for this week's range. Again, same thing. I think it's very likely we go into rest mode now. Let's look for that 25 to 30%, that 25 to 50% to hold of the weekly candle range. As long as that happens, I am not too scared or worried about anything for the bulls. We can mark off this previous all-time high right here, pretty much right at that 5,100. And obviously we're looking at weekly candles here, so it's going to be a lot wider. So we've got a big zone here. I mean, you know what? Let me get this one better. That's probably more like it. Okay. So, I'm not doing that. Okay, so as long as we're really holding over 20, we're going down a little bit lower to the 20s. As long as we hold over 700, I don't really have any issues, right? So we just have to hold over this balance high. Here you can see we went sideways, sideways, sideways. As long as we hold that, there's really no issue. And it's just still marking up here with these previous all-time highs from back on that July 4th rally, which was very strong market then as well. So as long as we hold over those, there's just really no issue on the bigger picture for the bulls. Anything coming back into those areas, I'm going to cough. I'm trying to warn you guys ahead of time now. Excuse me. Sorry. Anything holding above those, got to consider it bullish. Pulling back, boom, boom. Anything like that. Or just a pullback to the 2100. Boom. As long as we hold over this, I mean, what do we say? 6,200 for ES. I'm going to say, first I was going to say 23,000, but we did 1,300 points in 1 week. I mean, 25,000 end of year? Question mark? It's possible, especially as long as we hold over this area. So let's say if we can build out a weekly flag, something like that, and see what we can do into the end of the year. Well, we're not, we talked about that divergence, the hello Momo here, overbought, oversold. Nothing on the weekly yet. We're starting to get up into that area, but it certainly has room there. And if we're going to mark off some lows, right, and just look how beautifully this really lines up here. The weekly high from August 19th, pretty much perfectly matching with the weekly low from the 4th. Boom, boom, right? So if we do trade, if we start really getting underneath the weekly highs from the week of the 21st and the 14th, that'll be our warning sign. We'll be coming back into this balance range, and that would be pretty disgusting. And if that happened, I would probably be fair to say I would be watching the lows from the 7th, the week of July 7th, for a possible downside target, taking us down to, now I'm speaking for 20K, 330, somewhere around there. Pay attention to that. Let's just jump over to the daily chart, see what we can take away. Okay, so these are the highs here that we've got to hold, right? Boom, boom. And we can even give it, if you want to, I came into the body here on the weekly, but, you could even make a little zone to say 20K, 20,800, if you'd like. Do a little zone like this. My mouse, I have to order a new mouse. I still haven't done it. Okay. We could do a little zone like that. Wonder if this, I mean, even here you could say the daily high from July 12th, is 970, and the daily high from the 15th is 21,026. So you can kind of make a little zone there too if you really wanted to. I like that 20. I like just keeping that at 20K though, 21,000. But I don't think that that's wrong. You know, if you were to put maybe a little demand there as well. 20K is good for me. Right, so still bullish. We pull back, boom, boom. Give me a pull back here, boom. Maybe we reject, I don't know. But in theory, boom. Right, and if we break under, well, then we'll be looking to sell. Down to the 300s, 20K, 300, 2400. Right. Let's go to our chart that we've been working with on these videos, and we'll see if there's anything there you want to pay attention to. Okay, got our high here, Friday candle. Right, so let's see, you know, we'll probably, and what was this range here? We had a marginal, did we make it? Yeah, 21,265, and the low was, still was about 100, about 125 points. I mean, not the worst, but here on the daily, you know, let's watch out for something like, you know, can we get a little flaggy action like so coming up? Oh, that top wick was ugly. Something like that. And then boom. Okay, definitely a possibility there. But I think that if we start to break under 21,000, if we certainly break under, I think Friday's lows, 120, under 120, and we'll see if we get some sells. Maybe from that daily perspective, maybe we come and retest the highs from July 15th. Maybe around 36, 21,036. Pay attention there. Okay, I think that's everything I wanted to go over. Daily here, not overbought at all on our Momo. Overbought, oversold, custom indicator, so nothing to worry about there from that perspective. Let's take a look at some day trading levels for this week. All right, so what's going to have to happen, right, for the bulls, right? Well, I really need to see back over, again, now pretty much everything for now. I'm going to be talking for 21,000. All right, so I really got to see back over 2150, 255. So I want to see back over 255, make an attempt to make a higher high over that 265. Otherwise here, could have a little look above and fail, right? Looked above here as well. And it's a little hard to see the wicks here. But looked above here, came under, had a bit of rejection, came under here. So it's possible there that, you know, especially on this hourly, it kind of looks to me like, I mean, where are we at? We got to see where Globex opens, of course, but I mean, as it stands, if I was just looking at this now, I mean, I'd be kind of thinking short, right? As long as we don't get over at 255, you know, we have that very easy potential to kind of just drift down. Oh, wrong tool. Just kind of drift like so. And again, that would be healthy tonight. You know, let's get a little reset. We just ran 1,300 points. And maybe we come back, match these lows from 5. Maybe we come back into the 125s, somewhere in that area. Maybe we get that figure, 121. Yeah, 100. It's possible as well. But underneath that, then it's very possible we can trade back down into basically that 2,100. Under 2,100, looking at 29.63, and under 29.63, probably 2,900. 20,900 would be a possibility, and then 20,875 would be the next level I would be looking for underneath that 800. Only about 25 points or so lower, not that much. But if we break underneath, or excuse me, but if we break over 255, 21,255, we hold. Certainly get over Friday's high under that 265. I mean, why wouldn't we just go ahead and peak up to 21,300, right? And we might see that on Monday. Might take a look up at 21,300, look up, fail. Maybe we come back, retest that 250 here, then we go back up. Maybe then we do break that 250 and we look for that sell side a little bit more. It's hard to really say. If you really, another way when we get into these all-time high scenarios that you can kind of estimate some targets. I personally like to kind of wait for price to tell, but you can certainly do some extensions on the fibs if you would like, and that can also help you get some upside targets. So just throwing that out there too. We got 21, what is this, 350 basically, 345, and then about 150. Excuse me, 450, closer to 500. So you got that as well as another way. I don't use them that much, and to be frank with you, I'm not even. Hold on. Why is this? There we go. That's actually what I meant to do. So you know what? Let me mark these off. I don't think that's crazy. Oh. So over Friday's high, 265, looking at 283, 302, 50% extension would be about 315, 317 if you want to be specific about it. So there you go. You could do it that way as well. I like, it's just kind of, it is mathematical, but I'll just wait till price gets up there and then see what happens. And then I'm going to need another week of trading up there. And to really, that's just how I like to do it. But the extensions are something you can do when we get into these areas. So I just wanted to throw that out there for you guys. All right. Well, what a crazy week last week, but I'm glad FOMC and the elections are behind us. And now we can stop getting all these emails and text messages and stop seeing all that kind of stuff. And we can just look forward to see what happens. All right, guys, CPI this week, PPI, a lot of Fed speak. Should be interesting. Let's see how inflation looks. And, I mean, really, we're not going to see any of the results of the Fed starting to cut for a while. So, really, we're not going to know about if they started cutting too soon or too fast or too aggressively, and probably for another, I'd have to say, 6 months, something like that. But we will find out if they were right or wrong. So I will definitely be watching for that over the next 6 months. Personally, like I said, and I think I've said it before, I think we rally until the end of the year, and then January is when I start to get a little suspicious about the markets. But we'll see. Other than that, well, thank you so much for joining me on this lesson. We're not going to go over everything that we normally go over. Actually, I did want to look at one thing. Let's look at this SPXR. Let's see what happens when this comes a little bit higher here into this downtrend. That will be interesting. I did want to just a quick look on the put to call ratio. Nothing. VIX has been crushed. I think we were talking about that last video about a VIX short trade coming into the election, and it just got freaking destroyed. So for VIX, I guess I will have to say watch out for tighter ranges, and as long as we stay under 16, basically, 1575, there's no reason why we won't see VIX be compressed again, and we're probably going to see the 13s again, the 14s, 12s. It's going to be miserable. I hate VIX down that low, but it is what it is. And you can see here, just kind of pop, 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 election, and died. What else did I want to go over? I was going to keep it quick. TLT. Let's take a quick look about what the bonds are doing. Oh, they're coming alive a little bit. Why does this look like this? It's gappy. This is just ugly. This doesn't even look like, this chart is disgusting. I don't know what, is there a data issue here? 'Cause this happened on the dollar one time a few months ago. I don't know. Some don't look right. Either way, it seems like we hit the low. Didn't, okay. I think we did talk about this low from June. I didn't mark it, but I believe we go back in that last video. I think we did talk about coming down to this low. And we did get a reaction there. TNX must be coming off a little bit, but we're really kind of just trapped now here on the bonds. But as long as they hold 92, 91.80, yeah, look for them. Maybe we got a little shot for them to come up to 95, 94, 94.70. Take a look at that and see how that plays out. And let's just take a look at our TNX and CGI and how that works. CGI. Okay. All right. And look at this. Beautiful, beautiful. Right into our 44.8 and boink down. Right. We're kind of talking about that last video, about a little bit of that bounce. I know I was talking about a bounce in TLT for like 2 weeks. I didn't quite get it, but finally here we're starting to see a little bit of that reversion. So let's see what happens. As long as the yields stay under 43.65, I don't see why they wouldn't come back. Sorry. Why they wouldn't come back maybe to 42. I think that makes sense. Excuse me. That would make sense. Pop it right there. Let's see. Stay under 43.60. Watch rates to watch the yields to continue to come off. Maybe to 42. It might be a opportunity there. That's where we might see TLT start to fade once more. This 42 might line up with the 94 for TLT, or was it 95? I don't know, but that might line up, and that might be where we see that next inflection point for the bonds and the yields. So, all right, that's all I've got. Again, if this is your first time joining, thank you so much. Really appreciate it. You want to subscribe to the channel, hit that notification bell. I'd like to thank all my loyal supporters and followers. You guys kick ass. And also, if you're just prepping with me or doing any type of prep for the market, you're badass. Awesome. Kudos to you. Because we say it every video at the end, a prepared trader is a profitable trader. Remember, we make our money when the market's closed, not when it's open. We've got our levels already set. And then when the market's open, we have a plan. It's already in place. We're not just running around like maniacs trying to make decisions on the fly. That's not how it's done. A prepared trader is a profitable trader. So let's plan our trades. Let's trade our plan. Wishing everybody a great trading week ahead, and have a great rest of the weekend. And thanks so much for joining. All right, take care.